Welcome back to Market Day Report. I'm Chris Swift. We're working on the middle of the morning now and got the grains trading, and we have been all over the place so far this morning and trying to, unfortunately, instead of build on gains, we're building on our losses now. Corn down a nickel, $4.91 even on the December contract. I've got the March corn down a nickel at 506 and a half, and it looks like they're down about a nickel across the board. So let's take a look at the soybean market and see if it's been able to hold its gains. And unfortunately, not just yet. November down 13.5 at 1276 and a half. Jan up 12 and a half at 1296 and a quarter. And March up 10 and a half at 1309. That's really not that bad of a decline simply because we were up significantly on yesterday. Our wheat market kind of mixed right now. December up a nickel, 576 and a half. March up 1 3/4 at 603 and a quarter. Our Kansas City hard red winter wheat, it's down 1 1/4 on the December at 673 3/4. March down 1 1/2 at 682 1/2. And in our Minneapolis spring wheat this morning, the little shining light, we're firmer in the front 3 months. December up 1 1/4, 724 3/4. March up a penny and May up a penny and a quarter at 762 1/2. I'd like to invite my guest in this morning, Matt Bennett. Matt is with agmarket.net. And Matt, I tell you, we've had a lot of price movement over the last couple of days here. Going into the weekend, what do you see happening?
Yeah, I mean, the report was certainly friendly. You lowered the yield, lowered carryouts, world carryouts came down. I think the trade was expecting a blasé October report, and that's not what we got. As you suggested earlier, the bean market really ramped up to the upside. Now, it looked like we're going to have some follow-through buying here this morning, but then in the last half hour to 45 minutes, we've really kind of fell off. And so are we going to get back some of those gains? It certainly looks like it. But as you also suggested, this bean market was so strong yesterday that giving up 10 or 11, 12 cents isn't the end of the world by any means.
Sure, and I noticed even though the front end, we know is traded much more actively than the back end, but sometimes the back end can be a little bit more foretelling than what the front end is there. And so I look at the May contract of beans and noted that it stopped just right at its previous low 2 months ago within less than 2 to 3 cents, and now is a reversal. Do we think this could be the actual reversal to it, or are we kind of in between and in betwixt the actual reversal, or maybe continuing with this downtrend?
Yeah, I mean, in my personal opinion, you take that into account. You take into also account that the world numbers, while they're lower, they're actually still could be all-time record stocks for soybeans. And so Brazil's talking about planting more soybeans. My personal opinion is that maybe we could actually have set the short-term top in place for the time being. I don't want to be negative, so to speak. I'm just struggling to think that world buyers on the nearby are going to be wanting to buy beans above $13, knowing that there's so many beans out there. And so, I think corn yesterday, you held support there. It sure looked to me like we'll be able to at least look at the corn market stabilizing here, but we're bordering on giving up all those gains as well.
Sure. And I noticed yesterday, seemingly like after we got that information from USDA, the attitudes all kind of shifted towards, well, now we need to see what South America is going to do. Clearly, we're probably going to be a little bit short when we get to the end of the year on beans here in the U.S. And so a lot of determining factor around the world will clearly be what the South American crop does. So is there anything that you see in the wheat market right offhand that just kind of stirs you? I know we've been in a terrible bear market, but maybe something you see?
Yeah, I mean, it's been an awfully bearish market, but at the same time, you're looking at carryouts a little bit bigger than what we've seen. But I want to urge people to understand this wheat market, whether it's global, domestic, we've seen 50% stocks to use ratios for much of my career. Now we're 30 to 35, 36%. So it's not like we've got this plethora of wheat. I've got to think the wheat market's been beat up enough for the time being. I certainly look to see more stability here. I'm not saying we're going to get a huge rally, but I don't see a whole lot more downside right now.
Right. And then the corn. So corn's going to be a big storage issue all this year. We've seen the basis now with the Mississippi River not being able to allow any barge traffic going down through there. Is there anything that for our livestock producers or even our farmers here with this basis issue as well as storage that they might want to do? They had a little rally. They had 10, 15 cent rally in the corn. Is that enough to start doing something in the corn market before the weekend?
Yeah, I mean, to me, I want to look at a rally like this that nobody was expecting as a gift versus what more can we get out of it. And so, as a seller, I certainly want to reward the market to an extent. At the same time, basis has been kind of crummy, so to speak. Anything that's not going in the bin, though, I'm certainly considering selling some of that, maybe keeping a little bit of ownership in here. As far as a livestock producer is concerned, I might be a little more patient as far as my purchasing goes, kind of let this market play out just a little bit more, because U.S. and world supply definitely looks to be growing by a fair amount over last year.
Absolutely. Matt, stay with us. We're going to come back and talk more about that livestock market in just a second with Matt Bennett. Stay with us. And welcome back to Market Day Report. We're going to take a look at our livestock markets now. And over my shoulder, I can still see they're just a little bit mixed, with October holding on to a 10-cent gain at $185.50. That is on the low of the day. December down 37, 187.42, a tick off the low of the day. And April down 42, 194.57 on the low of the day. Feeder cattle market, let's see if it's got any shining lights, and a little bit softer in it too. October down 82 at 251.20. November down 82 at 252.75. Jan down 70, 253.77. Yesterday's feeder cattle index reading was 250.30. In the lean hog market, we're down 7 in the December contract, 70.02. The Feb's down 35 at 74.67, and out to April hogs, 81.07, down 45. I'm going to invite my guest back in, Matt Bennett. Matt, I tell you, we've seen a lot of fluctuation now in the livestock markets, and now that we have seen what the cattle feeder is going to have for corn issues out there, I heard you say earlier that they might want to wait just a little bit on it. Is there something they might want to do in the options market, though, that just in case there is something that pops up unexpectedly?
Oh, absolutely. I mean, the thing is that option volatility is pretty low. And so, if a guy wants to protect himself versus something unforeseen, and, if everything that we know right now is what we know, I've got to think this cattle market's going to struggle to rally. But as you know, there's lots of things that we don't know just yet. And so with that being the case, I mean, step in there and buy yourself a call or a call spread, protect yourself. It's pretty cheap to do so. But as far as this cattle thing's concerned, these fats, in my opinion, they're just kind of hanging around here. Looks like we made maybe a swing low yesterday, but I think moving forward, getting to that $200 level in April, I think it's very possible. I think you're going to have to see some of these really low cattle on feed numbers that we've all been expecting. I mean, it's a futures market. It's why cattle's been so strong, but I think the market wants to go to 200. I just don't know that there's much on the other side of it. I think we hit there sometime in the next 3 or 4 months, though.
Sure, and well, with the April contract, we approached it at some point in time about 2 or 3 months ago in the April contract. So I can see where it could easily get up in there, and we're going to stay shorted for quite a while. So, Matt, certainly do appreciate you taking the time to be with us this morning. It's Matt Bennett, and he is with agmarket.net. So, Christina? They're still moving on.
They're still moving on. And it's interesting, as we get closer to the close on a Friday, anything can happen. So.
Oh, absolutely. Well, position adjusting. So window dressing. That's what they call it. Window dressing.
Okay, more to watch as we continue on. Thank you, Chris.